Hello everyone, welcome back. I'm very pleased you made it back here and didn't get lost in the building. Well done. You've got a treat waiting for you. The panel on probably the hottest topic in finance, digital assets. The full name is Digital Developments Reshaping the Financial Markets Landscape. And your moderator is one of our Bloomberg experts on the subject, Alex Wenham, who leads Bloomberg's Digital Assets Products and Strategy. Alex, I can't see you, but please take your panelists up to the stage.
Okay, thank you, Federica, and welcome everyone back from lunch. It's a pleasure to have you here. We have a packed agenda and limited time, so let me first welcome our panelists. We have Nicole Sandler, who is the Digital Legal Counsel at Barclays. We have Anat Quetta, who's the chairwoman of the Israel Securities Association.
Authority.
Yeah. Sorry?
Authority.
Authority, I'm sorry, yeah. I used to get so many acronyms in this world. Cool. Also have Babs Ogundei, who is the CEO and founder of Kudu Bank, one of the most fast-growing fintechs in Africa, and also Jose Manuel Campa, the chairman of the EBA. Welcome.
Thank you.
So, if we're going to be talking about digital assets, we can't avoid the elephant in the room, which is the crypto assets part of that conundrum. So I really wanted to kick off the conversation really trying to frame some of the challenges that, from a regulatory perspective, that you're seeing in the market today. So Jose Manuel, could I please start with you, if you could just outline what you see as the challenges in crypto markets today?
Well, I think the key challenge is that we have a new technology, and that technology has been used for a particular way that we call crypto assets, and we can say what that use is. And as usually happens with new technologies, those usages could be, some of them more legitimate than others, some of them more justified than others, some of them more prone to financial instability risk, other kinds of vulnerabilities to the system, and we need to be able to distinguish among those things. So as we go forward, for a long time, we've been at the European Banking Authority with other European authorities and other authorities around the world, arguing that this is a new development, that the way it's been developed is outside the regulatory framework, that investors, and in our case banks, also should be careful about engaging, should refrain from engaging in this, because we think it's highly risky, and basically all your potential investment is at risk, and that the business models of some of these activities are hard to understand or are hard to see them going forward as a traditional asset that you would think will bring you flows in the future through some activity. So time has evolved, this has grown. As part of that, in the European Union, we are keen and we're put forward some regulatory framework to try to bring some of these activities into a regulatory framework and try to distinguish what's what I would call reasonable, justifiable, attractive business models and innovations versus what are things that we think are probably less likely to have sustainable business models, and regulate that going forward. So hopefully that will be the future.
Yeah, I like some of the comments you say there, and it's pretty apt when you think that this is a market that is developed in a completely different way to the other financial markets that we see today, starting from a retail phenomenon, really becoming, I won't say is, because it's definitely becoming perhaps more of an institutional asset class as well. But Anat, I'm keen to hear of your view from Israel. Do you see the challenges as the same?
Well, yes, I do agree with the things that was said here, but I would like to put our views on the fact that crypto market is a very narrow market in terms of the size of the market, and it's getting narrow and narrow over time. And today, the size of the crypto market is about 0.35% from the total debt and equity markets worldwide. And the question is, I'm calling it ROR, return on regulation. What is the return on regulation by putting efforts to directly regulate a so tiny market? And I think that the answer for that is in the other part of the map, the technology. I think that the technology that crypto is based on, and we will speak on it later on, is a very promising technology, I mean DLT technologies. And I think that it offers an optimistic way for investors and issuers to do business in a different way, using qualities that are not present in the market, like endless access to end users worldwide, frictionality, the idea of cutting the middlemen, which is brilliant and very pro-consumers. So I think that in the end of the day, after about 200 years that the mechanism of exchanges was not changed so much, the way that the value chain is operating by delivering the value to investors and issuers is quite the same. An exchange with members, most of them are banks, end user, client of the banks. I think technology has a very promising thing to offer us, and we should enable it. So in the bottom line, I must say that we put a lot of efforts in Israel in order to understand what is a good regulation for the crypto market. And just a week ago, our Ministry of Finance released guidelines for the regulation on the crypto market in Israel, which at the bottom line recommends to combine the power in one regulator and not to split it between several regulators. But it's still subject to a legislation process, and looking in the eyes of return on regulation and what is the net impact for the economic growth in Israel and worldwide, I think that we should consider if it's worth to invest our efforts there or no. And in addition to that, I must say that the knowledge part is also challenging, because we are not technology engineers, we are regulators. Most of us are legal experts, economists, auditors, and we have to grow our knowledge over time in order to know how to well regulate this market and not to kill it.
If I may,
Please.
so just building on that, I think actually one of the biggest, I don't even want to say it's a challenge or an opportunity. I'm an ex-lawyer by trade, and I was told at 3 a.m. doing due diligence, there's no such thing as a challenge, everything is an opportunity. I'm not sure how much I believe that, but when I think about this market, markets have grown to be global, but crypto assets and digital assets, by their very nature, because of technology, they're natively global. And that in and of itself is a challenge and an opportunity, because regulation isn't generally global. But regulatory clarity for an institution such as mine is a real necessity. So I just wanted to highlight that the global challenge and opportunity that comes from this new asset class.
Definitely. I think one thing as well that was mentioned is you can't kind of think of it as this homogenized asset class, right? Is it a commodity? Is it a security? Well, the way that I talk about it at Bloomberg is you ought to manage it like an equity. It trades like FX, and then you use it like a commodity. So having a little bit of a targeted approach is getting everything under one regulatory banner, I think, is an interesting development. But Babs, I'd like to bring you in on the opportunity side, or challenges if you have comments on where you see crypto markets in Africa.
So I think actually in Africa and emerging markets generally, I think the cryptocurrency philosophy is actually probably more apt because, you know, emerging market is generally volatile in terms of, you know, the currency and the currency risks and whatnot. And to a large extent, I think crypto does, you know, mitigate against that. And also from an FX perspective, crypto plays very well in that space. However, you know, I think and I think Anat touched on it a little bit, there is kind of a generational sort of shift or gap between those that regulate financial services generally and those that sort of promote the movement of a new wave or brave new world. And I think, you know, that does naturally, inherently create a little bit of friction, a little bit of maybe lack of trust or lack of belief in the competence of this new thing. So I think that's a fundamental sort of, at least from the psychology of how people interact with money and how people trust those that regulate them. We need to bridge that gap and then actually start the dialogue in terms of, the benefits of regulating, and also from the regulator side, I think the sort of understanding and, the ideology behind the people behind sort of this new world. But the benefits are there. It's just how do all sides make it work?
Yeah. This is a good segue, and I know you've given us a little bit of a view on how you focus on the regulatory challenges with crypto markets, but obviously the EU has been very, very progressive in how they've been approaching that. So, Jose Manuel, can I bring you in to talk a little bit about, how MiCA is going to solve some of these challenges in crypto assets today?
Sure, happy. I mean, we don't have much time, so it's going to be very quickly. But the basic idea is to have an understanding of, there are certain type of products being offered out there because there's an underlying technology and that technology is used in different ways via products, right? So different type of products. So let's have first a broad differentiation between those two products based on, vaguely speaking, on what's the underlying business purpose that it offers to customers. Whether it's a means of payment, so it's an alternative to a payment device, call it e-money, credit cards, regular money, whatever you want to call it. That's one possibility. Or it's another type of product that actually is more like an investment product because it's perceived that it would be selling some services in the future that would generate flows to whoever invests in that product. So that's the basic distribution. So it'll be like stable currencies, to vaguely speaking, as like payment devices and investment assets. And those two then therefore will be regulated more or less under the existing mechanisms that we know, which for like a payments institution, similar to what e-money are, or for financial assets. There's a way that we regulate our financial assets that would require, depending on the type of asset, the size, and its business model and ambition, more authorization, local regulation, local registration, or more EU-wide, if it's more a critical crypto asset, more EU-wide regulation. And that's sort of the essence of how this system will work. Hopefully, as I said from the beginning, a first initial understanding of what's the underlying business model and business rationale that this product is bringing to the market.
Cool. Thank you for that. I think also, and you're closest to me, but also based here in London, Nicole, Rishi Sunak had a few comments of when he was Chancellor in April. There's some rumors this morning that I read on Bloomberg News around an industry kind of feedback for what crypto regulation should be in the UK. What's your viewpoint? Should it mirror MiCA? Should it be something different? It'd be great to hear that.
So we are eagerly awaiting a consultation from HMT on the moment on unbacked crypto assets and how to regulate the crypto industry. So what I find really interesting, though, is the way that we talk about crypto, sometimes it sounds like we're talking about one thing. Now, when I think the first time I did a panel on crypto assets was back in 2015 or 2016, and I was like, there are 300 different types of crypto assets. I did a panel maybe about 3 months ago where I said there are 18,000 different types of crypto assets. To be honest, there might now be 20,000, potentially there could be less given recent events, but it shows how much it's grown over recent years, and you cannot treat them all the same. Now, I think what MiCA does excellently is it does bring some regulatory clarity and harmonisation to the market across the EU. I think that is absolutely wonderful. Where it's slightly tricky, though, is the idea of the taxonomy, which is incredibly broad. If you have a taxonomy which is so broad, extra things could potentially get caught. Now, that's challenging because you want to understand exactly what it is you're regulating and you don't want to have this one-size-fits-all. When I look at the UK, so when I think about MiCA, for instance, NFTs aren't included. And I understand why NFTs aren't included because when we started looking at MiCA back in, I think, 2018, 2019 initially, and then 2020 was the consultation, NFTs really weren't something that people were looking at. But they are now. So what we're going to see in the UK potentially is a regulation that has a slightly different taxonomy and includes things like NFTs and DeFi. Now, we're anticipating that 2 years down the line, NFTs will be looked at in a report by the European Commission. But that's one of the challenges we then see. I work for a multinational corporation where we deal with things on a cross-border basis. We do not want to have different taxonomies. We do not want to have totally different frameworks. So from our perspective, starting with MiCA is an excellent starting point, and then looking at where potentially it's not quite how we want it to be. Because, no offence to any regulator, no regulation is perfect. It needs to evolve over time, particularly when you're working in something which none of us have really had to work on until maybe 7, 8, 9, 10 years ago. For some of us, even 2, 3 years. So it's a challenging space, but we don't want to have totally different frameworks. But let's see what comes out from our regulators over the next, I guess, couple of weeks.
Makes sense. Well, good news is we're not even halfway through and we've finished with crypto markets and crypto regulation, so we can move on to the underlying technology, which I know we're all very passionate about. And one use case for that is CBDC. So, Babs, I wanted to bring you in. Obviously, Nigeria have launched the eNaira. You're a fintech operating in Nigeria. Could you give us some background around what it's there to solve for and maybe the success of it so far?
Yeah, so I think Nigeria was the first African country to launch a sort of its own digital currency. Again, I think the use case it's clear. As I said, the Naira is relatively volatile. There was a huge, I think, crypto use case generally. My initial thought was the sort of country's digital currency would help in terms of tracking exchanges between other cryptocurrencies, which is what the government or the central bank was fearful of in terms of money laundering and just tracking funds. The eNaira, which is called, I think would have done that, aided tracking and monitoring. However, I think its launch, which was around October 2021, has been a little bit underwhelming. I think the reason, my personal sort of opinion on the reason for that is it goes back to this element of trust. At the time, the central bank had sort of not banned crypto, but prevented deposit-taking entities from enabling trade between fiat and crypto. So it kind of was almost a contradiction to them now releasing their own digital currency. And it's a very young demography, 70% of the population are under the age of 30. So that, I don't think we can underestimate within financial services that element of trust. Even within sort of the regulatory authorities, you need to speak the language of the audience, of the consumer that you're trying to protect. So I think that's the main reason sort of the eNaira hasn't taken off. But I'm optimistic that because the use cases are sort of are very relevant for the country, with a bit more, I think, probably requires a bit more PR around it for adoption to take off. I think one of the things that can be done and probably should be done is having a lot more involvement in sort of just from inception, the design phase, the marketing phase, a lot more involvement with sort of players in the sort of fintech space, companies like ours, like Kuda, and founders of such companies to help tell the story and help bridge that that gap, that trust gap. But as of now, it hasn't really taken off.
Maybe just a quick follow-up question, like the wallet technology that the eNaira sits on, is that also a challenge of adoption, or?
So the again, it wasn't built in the country. It wasn't built in Nigeria. So there are peculiar challenges sort of in the country or in emerging market generally. So I think just expecting something to work based on what has worked outside or in a more, I guess, developed environment that has developed sort of financial infrastructure, you almost set yourself up not to succeed. So yeah,
makes sense.
That's the challenge.
I think let's move on the topic of CBDCs to the EU. So the EIB, I think just last week, launched another tokenized bond. This time it was a little bit more unique in the fact that the Bank of France and the Central Bank of Luxembourg got together to tokenize EU central bank money, the kind of first use case of an EU CBDC. Obviously, there are a number of initiatives at the moment going on about European CBDCs. Could you give some commentary, Jose Manuel, about where you think the use cases are, what you think is going to be potentially a good outcome?
As you said, and I think this is not unique to Europe, but basically a vast majority of central banks around the world are now assessing the opportunity and the uses that a potential CBDC can have in their jurisdictions. And obviously, Europe is no different. The ECB has a clear project going forward. The Bank of Sweden probably even more advanced than the ECB. There's all these exercises that you just mentioned about the EIB and the Bank of France and Luxembourg. No, I think that it's just a matter of how to incorporate that technology in a way that makes sense. It's just to provide better services. And I think that, and I've said it before very well, this has the potential to reduce intermediation costs while enhancing security and preserving all the other challenges that we have. AML concerns have always been a concern, but cash in itself has obviously has always had a lot of money laundering possibilities and concerns linked to that, so that's not novel. So there are a number of areas in which they need to be discussed. And maybe we'll get into it, like what's the usage, should be at the retail base, should be at the wholesale base, what should be the focus. That's an area for discussion, I think, within central banks, where they want to go, and they're likely to differ in that part. So I see there will be experimentation going forward, and I think that's good.
That's a great segue, actually, to you, Nicole. How do you kind of break down the legal conundrums around the kind of wholesale use case, which this bond issuance definitely was kind of akin to potential retail use cases like the e-Naira in Nigeria?
So for full disclosure, I don't do law anymore. Well, any lawyers in the room, great that you're continuing to do that. I focus very much on the policy side. But I find the retail and wholesale discussion really interesting because actually a lot of the airtime that you see in terms of when you hear commentary on central bank digital currencies, it's often on the retail side. And it's often on the retail side because there are greater challenges on the retail side. The risk of disintermediation is much higher than on wholesale. Data privacy issues are obviously existing on retail, but you don't have the same challenges on wholesale because you don't have the personal data problems that exist. Now, one of my, I don't like to say pet peeves, but I do struggle sometimes when I get asked the question, do you think a central bank digital currency is a problem in search of a solution or a solution in search of a problem? And I think it goes back to what Jose Manuel was saying. There's different use cases. Now, if on both the wholesale and retail side, you're looking at doing cross-border, I think the FSB has very clearly noted in the G20 that cross-border payments is a real problem. It's expensive, it's laborious, it takes a lot of time. If a central bank digital currency could assist on cross-border payments, then to me there is a problem, and one of the potential solutions is looking at a CBDC. And then it's what technology you potentially use. The CBDC does not have to use DLT. If I look at the PBOC, which is Chinese regulator, their central bank digital currency doesn't actually use DLT until you get to the intermediary level. And when we sit and talk to the European Central Bank about whether it's a trigger solution or using DLT, it's very much up in the air. And the other challenge that you then have is, or an opportunity, is it takes a very long time to actually build a central bank digital currency in a way that is going to work for the markets, both legally and both on a technological perspective. And what we see is, if you're going to build it on DLT, how long is that going to take, and what is the cost going to be for the markets on that? If you're then going to have a trigger solution, how long will that last for? So those are different things that we're discussing with our different central banks. But I think it's a really interesting time, and I definitely see a role for CBDCs, but it's making sure that they're designed appropriately and the risks are mitigated appropriately. And I have to say that, but I think it's really interesting that you said in Nigeria there hasn't been, or how I took it away, the same industry and regulatory collaboration, because within Europe and within the UK, there is a lot of industry and regulatory cooperation through different advisory groups and expert groups, because it's something that's going to affect everyone in the ecosystem and new participants that we haven't had to necessarily work with before. So it's an interesting time.
I like how you break down by use case. Obviously the CBDCs that exist today from a wholesale perspective kind of makes a lot of sense, but then tokenized deposits, so another thing that's coming in, tokenized deposits versus stable coins, maybe be a battle of the future. But continuing on the DLT technology front, I'd like to bring you in and to talk a little bit about some of the engagements you've been having in Israel with DLT technology, what use cases you see being the ones that are resonating the most.
Sure. And just a word about CBDC, even it's not under my mandate, but I think that one of the challenges to have an actual CBDC anywhere in the world is the fact that the trust could be transferred from the commercial banks to the central banks, and then it could be an issue of stability for the banking system, because everyone prefers to have a tokenized deposit in the central bank instead of his commercial bank, because it should be less riskier. So I think that this is also a kind of an elephant in the room, and until we will not have an answer for that, it will not happen unless crypto will raise its head again, and it would threat governments, central banks, etc., but it's not the situation at the moment. Going back to collaboration regarding DLT, and when we have started up to think on how we can best use DLT for the benefits of our capital market, I think we've done some irregular things in terms of being a regulator and being collaborated with entrepreneurships in the market, and I think it's very much linked to my personal background, because I came from the private market to my current position, and I felt very comfortable and very natural to cooperate with the private market. And I think that this is one of the key points to successful collaboration on this area especially. What we've done so far is a couple of initiatives. We put a lot of efforts to understand the technology and the concept of digital exchanges, how it works. We keep covering leading projects worldwide, including the one that unfortunately failed in Australia. And we started up with a process of proof of concept with some entrepreneurs that were very successful, and let us learn what are the key challenges on those projects. Later on, we have a successful hackathon with the industry. And one of the good fruits of this hackathon is a project that is just launching up in Israel of issuance a digital governmental bond over blockchain. I think that if this project, and I believe it would be very successful because the Ministry of Finance is involved and the exchange and other market participants, I think that if it will be successful, this would be a start of a new direction for digital issuances in the future of other digital assets, and developing this asset class much more widely also for equities and other kind of securities. I think that one of the use cases that we tried to solve is the clearing and settlement issue over blockchain, and this was also one of the targets of the proof of concept project that we led. But currently we're at the point that we're examining the system, and we're trying in real time the use cases. And I really believe that DLT could be a very good technology to be used much more heavily in capital markets. And it's increased the probability that tokenization of capital market is right here around the corner.
I think we're talking about tokenization of capital markets and DLT as the underlying technology to those. We also need to talk about experimentation. So it might be good to bring in both yourself, José Manuel, and also Nicola, to talk about the kind of contrasting viewpoints from the UK and the EU around sandboxes. You better give some guidance to kick us off, José Manuel, around where you see the EU pilot going. Is it going to solve for other use cases in the future?
Yeah, I mean, it's an interesting point because, for us, when we think about technology, our approach, we always say, we need to be neutral. We need to be neutral towards the technology that comes into place, and also neutral about who is the player that brings that technology, whether it's an incumbent, whether it's an industry participant, or totally outsider to the industry. And we have to be aware of what's the use of the technology, what are the implications, and then regulate the areas that are competent for us, which is potentially financial instability, competition risk, or consumer protection. For that, we need to understand the technology. And that requires innovation. Many times we're asked to regulate users or usage that was still not there, which is very difficult. How am I supposed to anticipate the uses that technology might have? So what we did is we created Sandbox as a way to work, but we also created we call it the European Forum for Innovation Facilitators, in which we meet twice a year with industry, with small fintechs, with new initiatives, to try just to understand from them what is that they're doing, how they see the process going, and that helps us not necessarily build regulation, but at least build an understanding of where the uses may be going, and then from our perspective, it's thinking more about potential risks than opportunities, but both, where are those potential risks may be coming from, and where we identify gaps that may need to be regulated. And that has been incredibly useful. Also within the different national jurisdictions, there are obviously different regulatory regimes and boxes that have facilitated the presence of some of these innovators there. So that's been very productive. We'll continue to do that.
I think the FF has been a really great initiative because, we've actually gone and sat with it's the European Sandbox that Jose Manuel was referencing. And the reason I think it's so great is for the exact reason you said. Essentially, if you want to regulate something, you need to understand it. And it's very challenging to understand something that you haven't played with, whether you're on the industry side or you're on the regulatory side. So I think having things like the FF, the pilot scheme, the potential FMI sandbox that we sat in on a call on last week, I think they're all really, really valuable because this is a really challenging area. And there's going to be lots of different use cases, and you don't want a one-size-fits-all approach to the regulation for the different use cases. That's not going to work. You need to have increased knowledge, increased education, understand where the use case is hitting the regulatory perimeter, what new participants need to be regulated as well, because it's not the same ecosystem that's previously existed, and then where regulation needs to change, and what tools you as supervisors need to help do your job, essentially. So I see real value in the Sandbox initiative. It's things that we've participated in at Barclays. But it's then also taking use cases through. I don't want to go too much back to MiCA, but I think one thing that I thought was really interesting was when we were looking at FTX, one of the questions was, would MiCA have helped? And yes, MiCA would have helped because it was governance issues, segregation of client fund issues, liquidity provisions. I think one area that will need more work, both whether it's from a Sandbox perspective or future regulation, is the idea of conglomerates and bundling. I think that's something that hasn't been touched upon as much, but supervisory colleges, I think, are a great idea, and that's why I go back to FIF. Lots of different regulators sat around the room talking about the challenges that they are seeing, because it's not just one member state or one country that will have one challenge. These challenges are going to go across the different jurisdictions, so we all need to be talking to each other to try and solve these challenges, opportunities, different things that we're seeing.
That's a good segue. We've been talking a lot about digital asset technology, crypto assets, but also there's like technology and fintech in general. And I'm going to steal your term and return on regulation. I like that. Let's talk to you, Babs, around how you built a successful fintech, a regulated fintech in Nigeria. How do you see that return on regulation kind of conversation between entrepreneurs and regulators?
Yeah, I think we've been actually quite fortunate to have a regulator that enabled dialogue. A lot of it is about understanding what the innovator is trying to do. I think we're all aligned in terms of we're trying to serve the same consumers, both innovators and regulators. So there has to be some form of alignment. It's just how we go about doing what we do. So we were fortunate to be able to sort of communicate our plans to the regulator. We got licensed. But again, it doesn't stop at the point of getting regulated. It's a continuous sort of evolution. When we started, when we got the license, we were sort of a 5-man. We probably had about 10,000 customers. Today we have 5 million customers doing over, $3 billion worth of transactions on a monthly basis. So it changes, and the dialogue continues to evolve, the risks increase, and we have to appreciate that there are risks. So essentially, I think the key thing is to just be completely open and not see regulators as trying to stifle innovation, but they have a duty to protect the consumers, and we need to just find ways to continuously work together for that purpose.
Perfect. Look, with 15 seconds, 14, 13 seconds left to go, I think we'll have to end it there. But look, personally, thank you very much for coming into the event today. Nicola, Anat, Abs, and Jose Manuel, really appreciate your thoughts. Thank you.
Thank you.
Thank you.